Domenica, what are you hearing on the ground from the bank, which hires a lot of foreign talent on that H-1B visa?
It's nice to connect again. You know, it's been a dramatic weekend, and I was talking to JPMorgan's top leadership exactly about the impact that this new H-1B visa rule will have on hiring in the U.S. and whether it will result in more offshoring, which can have a counter impact here in India. And so this is what the APAC CEO of JPMorgan told me about the total cost in terms of this H-1B visa additional fee that will have to pay.
If the companies in America continue to hire as many students or workers as they did before, it will be about a $14 billion, essentially, tax to companies. And that will affect U.S. companies, will also affect Indian companies that employ a lot of people in the U.S.
So $14 billion is not an insignificant amount, Haslinda, and some part of that will fall on the financial numbers of Indian IT companies. It will have implications for remittances back in India. It will also impact the student ecosystem because a significant number of Indian students looking to study abroad tend to go to the U.S. with the hope that they will be able to move there with a job eventually. And I think all of those dreams now are going through readjustments.
Dreams may get dashed, and how about the economy, the broader outlook for the Indian economy?
That's also going to be a key point of conversation here at the JPMorgan India conference. You know, and I think, like we discussed earlier on in the show, there are strong points underlying the economy despite the tariff and now H-1B visa headwinds that we've seen through the course of the year. We've had good GDP growth. We are looking forward to maybe a bump up in consumption on account of a cut in consumption tax that goes into effect today. And then we've had an IPO boom. And in fact, to talk about that, I am joined by Anu Aiyengar, the Global Head of Advisory and M&A at JPMorgan. And Anu, I want to talk to you about the IPO boom, whether you see that as being sustainable. And next year, we're going to see two behemoths come to the market, one of them being Reliance Jio and NSE. So are your clients trying to get their offers done in good time before those two come upon us?
Yeah, it's really exciting time to be here, because the number of IPOs that we are preparing to do in this market is higher than any single market that we have kind of all our people focused on trying to bring companies to the market here. And there's a lot of good reasons for that. You talked about kind of the underlying growth in the economy. But beyond that, when you look at the ability in this market for whether that is private equity firms or strategic to cycle through the capital, because people have been able to raise money on the India story. Some of the new funds that private equities have raised have been on the back of, I'm going to invest money in India and Japan. And they're able to show that the companies they have here, they can exit through the IPO market. This cycle that private equity kind of functions on, this hasn't worked as effectively in many of the other markets, but in the Indian market, it's working really well. And that has been a big attraction in terms of being able to raise capital on the back of the India story.
So last year we did over $20 billion in offerings. Do you expect that to be the number this year? Do you think India will become, on a regular basis, a $20 billion IPO market?
It could be much higher than that. I would be more ambitious than that. Because as you have more amount of capital that is flowing in, more trading, more number of investors, and the size of the capital markets in India is growing, you do have the ability, as the market matures, for this size of how many companies are public, the overall valuations, market cap of the Indian exchanges, to go higher and higher. So I wouldn't put a limit based on what it is last year, because this is a growing economy where there is still several private companies that exist, as well as several private companies which are getting formed every day. And certainly in some sectors, whether that is technology, energy transition, AI, areas like that, there's a lot of innovation that happens in this economy as well. So we are very bullish on our outlook.
Are you equally bullish on M&A and private equity? Because that's been middling through the first half of this year, and it's not clear post the tariff announcements on India, whether the mood has sort of sombered even further.
So look, this whole year has been about navigating uncertainty. The news cycle that happens and ever changing, right? Because if you did tariff model in the middle of April, that model kind of was extinct a month later, and then again. And so you have to constantly not just manage for today, but manage for the future. Because on the other side, you look at the cash flow generation of companies, you look at investments and the connection between CapEx and cash flow, those are all pretty attractive because people are continuing to invest, they're continuing to generate cash, and that bodes for a healthy economy. Having said that, there is always caution when there is uncertainty, because M&A is a confidence game. Right. And so when you have this level of uncertainty, then you need to think through that, analyze all the scenarios, and you're just a little bit more cautious in activity. Despite that, Asian M&A volumes year to date is up 58%, despite that. Globally, it's about 28% or so up. And Asia has been north of that because some of the other parts of the world, it hasn't been as much of an increase. And that increase has been primarily driven by Japan, but India comes kind of right after that. So I wouldn't say that the Indian M&A levels are as much as it can be, because you're right, there are some headwinds. But if you can work through those headwinds and have higher certainty, I think there's upside to those volumes as well.
All right. Speaking of global trends, I think AI has been a big deal generator, but so is nationalism. And, marrying the two is that Intel deal, where we saw NVIDIA sort of pick up a 5% stake or invest $5 billion. I'm just curious, what do you make of that particular deal? But also, what do you make of these trends? And how does this set up 2026 for us?
Yeah, so 25 has been surprisingly robust for a year with this much uncertainty. And that's because while you have this uncertainty, you also have the need to get AI capability. So where is it that you've seen the most amount of activity is companies saying, do I try and come up with my own AI solution, or do I buy a company before it disrupts me, or while it is disrupting me, or after it has disrupted me, right? So there's a range of what it is that you end up paying for somebody depending upon where you are in the nature of the competitive environment. As well as the nationalism trend you talked about, I would describe that a bit more as navigating the regulatory landscape across the globe.
Okay.
Because you need to get regulatory approvals for most of your deals in almost every jurisdiction today. And that is not specific just to AI. So on the AI side, AI, supply chain, overall tech capabilities, nearshoring, all of these have been driving M&A activity. And a very important one, the need for scale.
Right.
In most markets, you see an amazing correlation between scale and valuation. And when volatility goes up, people feel that larger companies are able to navigate that better because you have more sources of capital. Right. You can do portfolio rebalancing. And you've seen a lot of that happen as well with international companies with their Indian assets. You see a lot of portfolio rebalancing happening. Some people investing more, some people monetizing some. Right. And the flexibility to do that comes from being global and having scale.